Just one advisory that made the market jittery this week, that comes from SEBI Advisory to mutual funds to limit small cap and mid cap fund flows this week. Hello everyone, welcome back to Nandu's Equity. Why would mutual fund houses would stop taking investments, new investments, whether it is lump sum or SIP? And also, what did SEBI advise mutual fund houses? These are the things we are going to see. In addition, as small investors and mutual fund investors in particular, what caution we need to take. In general, we call a micro cap, which is less than 500 crore market capital, less than 5,000 crore market capital, we call them small cap company. Imagine you're having a micro cap or a small cap company in your portfolio. What are all the scenarios could happen? So eventually any company could make profit and it can go up, you'll be happy. But what if a company does not do well and it is even going bankrupt? What will happen in your portfolio? So sometime you will not be able to sell those stocks, and sometime the company even get delisted from the stock market itself. And of course, when you want to liquidate, there will be no buyers. These scenarios could really happen, has happened to many people in the past. Imagine if a company is having some audit issues or compliance issues or any kind of these issues, with bad news it comes, nobody will again buy those companies. And especially when it comes to small cap and micro cap, there will be real hard sell and they will all be trying to exit. So that's a scenario when you hold. It's a risk also. You have to really be careful when you are investing in small and micro cap companies. So now imagine the same company is bought in large by mutual funds. That fund is with you. What are the possible scenarios? So you learn about something wrong with a particular company that is part of your mutual fund, and you all want to exit from that mutual fund. When a lot of people want to exit from one particular fund, what will happen? There will be liquidation issues, right? So there could be other repercussions. So SEBI does not want any of the investor to suffer in that manner. So it has given advisory. We'll see more in detail. SEBI further clarified there is no restriction on flows or portfolio construct for small cap funds, and it just mandated disclosure on concentration and also the disclosure of risk of those portfolios, especially small cap mutual funds. It made it mandatory to disclose all the holdings on a periodic basis. So SEBI has clearly concerned about the potential impact of sudden redemptions in funds. As I mentioned, if a lot of people want to redeem some mutual funds, especially small cap mutual funds, where the mutual fund house itself is not able to sell some of the micro cap company, what would happen? So those are real right concerns, and what SEBI wants to do is also correct, and we need to also be mindful where we are putting our hard-earned money. In India, there are about 33 small cap funds. When you include both regular and direct funds, that would be 66. Out of these funds, there are some funds that have been investing in both small and even micro cap companies, and they may not even have much exposure to mid and large cap companies. So SEBI is definitely concerned about these funds, and there are funds have already stopped taking new investment. There are 6 major reasons why mutual funds would generally stop new investments from investors, whether it is lump sum or SIP. So when a mutual fund house or a mutual fund would stop taking new investments, generally it could be the fund size. Like for example, the Nippon India Small Cap Fund has reached more than 50,000 crores in terms of fund size. So they have already stopped taking new investments since 2023 July onwards. In other times, the particular fund house or the fund manager may feel that the market condition is not conducive for new investments. So those times they will stop lump sum or even SIP investments. Sometime a mutual fund may close to new investors if the investment strategy itself is being altered. This could involve changes in types of securities that the fund invests, or shifts in the risk profile. Sometimes it could be from a low risk fund that want to go aggressive in terms of fund strategy, and when they switch from low to medium or medium to risk, definitely they will stop the new investments temporarily. Regulatory changes or compliance, in this case it's about SEBI. This is really what going to happen or already happening to many small cap funds in India. So SEBI is cautioning those fund houses to reduce the inflows so that they can manage well, and also how they are investing, and they need to do the disclosure of risk assessment, and also particularly the number of companies that they are having in their portfolio they need to disclose. If a fund manager believes that the current market condition pose significant risk to the fund performance, or if they anticipate market downturn, then they will decide to stop new fund inflow. And there could be other times because of system upgrade, mergers, like if there are two funds from the same fund house, they may want to combine them, or they want to restructure the complete fund management also. In those conditions also, they stop new investments. What should we do as new investors? Sometimes we will be very specifically interested in investing one particular fund. For example, Nippon India Small Cap Fund. A lot of us want to invest, but it is not open now to invest. What do we do? So we have no other choice but to wait for some of these funds. For example, Parag Parikh had stopped taking investments in 2022, and later it opened, and a lot of fund inflow happened after that. Now again it has touched 50,000 crore in terms of size. We can definitely consider other alternatives because as I mentioned, in small cap fund itself there are 33 different small cap funds. And of course, when you really look at all the fund houses, each fund house will have small cap fund. And also we need to be careful about selecting small cap funds. And as we saw earlier, it's best to avoid micro cap investments, because when the market has gone too high, anytime when it starts crashing, and the micro companies will be affected the most. So we need to be careful about piling up our money in terms of investing in small cap funds. So it would be time to diversify as well, and also consider other kind of investment. So should an existing investor worry about this, like when they stop, and what to really take away from the SEBI advisory? Generally, the closure of a mutual fund to new investors should not directly impact existing investors. Your investment in the fund remains intact, and the fund manager continues to manage the portfolio according to the fund's objective and investment strategy. To be honest, we need not panic, but at the same time, it's also time to reconsider our strategy from small cap investments in particular, and particularly you need to check the portfolio thoroughly of all the mutual funds you are having. It will also be time to check the performance considerations, and while the closure itself may not affect your existing investments, it's essential definitely to monitor the fund performance over time. So the closure may be a signal that the fund has reached a size where managing additional assets could become challenging or impact performance. So keep track of the fund performance relative to its benchmark and peers. That way you will always be safe. So in summary, there are a lot of mutual funds that are investing in micro cap and small cap companies, and those companies have gone very high in terms of their valuation. They are very, very high in their price. So if anything happens to these companies, or anything happens to the total market itself from a direction point of view, then there will be a lot of issues related to liquidation, and the investors would suffer if there is liquidation issue, and that could also spook the total market itself. So SEBI wants to ensure that that does not happen, and the capital of all the investors are protected. So that has given directive to the mutual fund houses and mutual funds to ensure proper disclosure of risk details and also the complete portfolio. And in addition to that, it is also asking them to ensure reduced inflow of these small cap mutual funds. So we do not really need to panic, but at the same time, as investors, I would say we all need to check the complete portfolio of our mutual funds as well, because generally we will just check the top 10 holdings and you could see a lot of famous names, but when you go into the details of the mutual fund portfolio, then only we will come to know how many micro cap companies are there. So micro cap companies are not bad per se, but there could be risks involved which we should be aware. So that's what SEBI wants us to be aware and be very careful about these investments. And of course the market reacted to it, and definitely it has recovered very good in terms of knowing the higher GDP numbers. Thanks for watching. Hope this video was useful to you. Please click the like button if so, and also subscribe if you have not subscribed yet.